This video is meant for those that are interested in investing in a franchise and really want to know how much the franchise could potentially return. What is the franchise ROI? How to find return on franchise? It's different terminology for the same thing. When are you going to get your money back? And what's the time horizon? And over how many months do you break even? Some of the terms, go through some different charts. And I'm going to highlight a presentation, a brochure that's available for download on our site that goes through the franchise ROI and all different types of metrics to better forecast when you can expect to receive your money back. This is Patrick Findaro, co-founder at Vetted Biz and Visa Franchise. We've helped hundreds of investors find and analyze the right franchise. And today I'm going to be again focusing on the return of investment for a franchise investment. And this is across all different types of categories. But first, let's define the term. What is ROI? It's a performance measure used to evaluate how efficient the investment is compared to other investments that you could potentially do. It really is trying to categorize and put a number behind an investment you might make. And then compare that to the total cost. So the franchise profitability expectations, this is a helpful chart that really show the setup where you have negative cash flow, business opening, business stabilization in the yellow, you have the break-even point, and then you go to consolidation where you have positive cash flow. And blue, you have the income going up, expenses going down. So the setup phase, this might last 1 to 12 months to just get the business going. And you might be investing 1 hour a week to 50 hours a week, probably closer to 50 hours a week. Or if you have a general manager, less time than that, right up until the business opening. Then you have the business stabilization phase, which can happen around the 6th month or continue as long as to the 18th month. It might be the 18th month for certain businesses that you have to build a portfolio of clients. So that might be if you're selling insurance, accounting, tax preparation, different service type businesses that after a few years, they're making a lot of money, but there's a period for it to really break even and then have that stabilization where you might be taking small draws of capital out, but you're not making tons of money and supporting your family from the business. And then you have the consolidation phase where your income really exceeds expenses on a month-to-month basis, and there's enough money for you to be taking money out or reinvesting the proceeds to really grow the business. So we have data on all different types of industries. For example, an insurance franchise where you invest $67,000 to $120,000, average gross revenue of $323,000 with an average operating margin of 60%. And this example has 207 locations. Automotive example, retail, tutoring franchise example, all different types of industries that I encourage you to visit on our brochure. And for you, if you're able to find a space, you can start planning out with a simple Excel what the costs are going to be, talking to the franchisor, talking to the franchisees to understand how long it takes to open the business, to get to the break-even point, to then have consistent positive cash flow where you're then smooth sailing and you're in the green and you're able to take dividends out of the business. So that's a high level how to best understand the franchise ROI or return on investment. And a really important thing we'll be discussing in a follow-up video is how to value your time in the equation. Because if you're used to making $100,000, $150,000 a year, and now all of a sudden you're working in a business 20, 30 hours a week, but you're only taking out $50,000 from the business and you have to invest hundreds of thousands of dollars of capital, probably is not a good return on investment